You can advance it one more slide, Sheree. Thanks. Okay, this is kind of what your form should look like. We've checked off the rehab box and put $40,000 on the line. We've checked the job creation box because they've created the jobs. We're going to use their business name, Interior Design Inc. We're going to put their two addresses, the one within the rural zone at 20 South Main Street in Anytown, USA, or in Anytown, Georgia, sorry, 30322, and the mailing address, which, like I said, was a little bit different when we were in the office as much, but I do this all through email now. So we've got 55 Walnut Street in Hometown, Georgia, 30455. The parcel number, their NAICS code, the name of the business creating the job, since they have checked that job creation box, and they've said the number of jobs being created in the taxable year. Now, it could be more or less, as long as it's two when it comes down to it, when the return is filed, everybody's in good shape. Got the date, lady's name, and the phone number. If that phone number looks familiar to anybody, 555-4444. No big whoop on Saturday Night Live. I'm showing my age. And of course, I didn't go down low enough, but she has an email address that she's put on there for me. So this is good to go. So turn to the next slide, please. What you guys, the rural zone team leader, will sign it, print your name, date it, put your title, and then you can send it through that OED email address, and it will eventually arrive at my doorstep. And I will sign it, date it, send a copy of the signed and dated form back to you guys along with a 2-page letter and to the business. Does anybody have any questions about filling out this form? We're going to go through one more example.
Trish, I know this has come up too. The rural zone team leader will ask, at what point do I need to submit this? Because sometimes team leaders submit it like the week that they talk to the person about the project. Other team leaders wait until maybe even once jobs are hired. So what advice do you give the team leaders on when to submit this to you?
I would submit it, say, it's the end of the tax year and they're probably not going to file a tax return using this credit for that year. You can wait till the next year, but file it sooner than later so it's off your plate. Everybody has the forms they need. Even if the rehab costs or the job numbers are estimated, as long as it says 2 on the line, then we can move forward with it. Maybe they're going to do 3, 4, 5 jobs. You never know. But, and what if they end up doing 1 that year? Then you know what? Then it is what it is. And they still have it filled out and they have it for the ready when they do meet the job requirement and can take the credits. So my best advice would be the sooner the better. And as I said, if numbers aren't final, then it's going to be worked out on the tax return, the form that actually calculates their exact credit, which is that ITRC from the Georgia Department of Revenue. Any questions on that? If not, we'll move on to the next example. All righty. So the business is a funeral home LLC. Funeral Home LLC. Their NAICS code is 812210. They're spending $20,000 in building improvements. They've got the same addresses, same parcel, but they're only going to hire 3 new jobs. Now, I didn't say this on the first form we were working through, but the first thing you need to do is look up the NAICS code, and then we'll go from there. Then you guys can start filling it out based on this information.
So they don't qualify.
Yay! Go to the next slide, Sheree. Funeral homes don't qualify. You're correct. Awesome. That's the first thing is, make sure they're going to do 2 jobs, or somebody's going to create 2 jobs. Or if they don't have, sometimes they buy the building and make rehab, spend rehab money, but they don't have lessees in there yet. So that's fine, but make sure that you're talking through this with them that, okay, you're buying this building and maybe making rehab, but we've got to get this type of businesses on this list in there. Otherwise, you're buying this and spending money and you're not going to get any of the credit. Okay, you can go on a slide, Sheree. Thanks. So in claiming the credit, I'm going to reiterate some things that Sheree said that deserve to be heard more than once. And are you providing them with a copy of the slideshow afterwards, Sheree?
I can, yes.
Okay, because this will help. This will be some good notes and some questions. If you think maybe you heard this or whatever, you can review this. And of course, absolutely always reach out to us in case, you don't know the answer to something. So in claiming the credit can only be used against Georgia income tax liability. So your Georgia tax due, dollar for dollar reduction of the income tax owed. The amount of the tax credits for the taxable year, as Sheree mentioned, cannot exceed the certified entity or the certified investor's total state income tax liability. So this includes if it's not the business's tax and this flows through to the individual, it includes the individual's total Georgia income tax. So if they have other businesses, then it all kind of lumps into $1 amount and they'll be able to take this credit against their total state income tax liability. So any unused income tax credit can be carried forward for up to 10 years and applied against future state tax liabilities. So any type of business on the listing, is this another thing I'm going to reiterate, any type of business on the listing of the NAICS codes that are acceptable can claim these credits. The job creation person has to be within NAICS code that's appropriate. Okay. So go on to the next one, please. So there is a particular way in which businesses calculate their full-time equivalents. So it is an aggregate, and this comes from the code, maybe the code, but I know the regs. An aggregate of employee hours worked totaling 40 hours per week, the equivalent of 1 full-time job, and where the equivalent comes in is if it's, worked by 2 or more people to total up to 40 hours, which is a wonderful benefit. So if it's just one job working the 40 hours, then that's one job. But if it's more than one job working less than 40 hours, you aggregate that to equal 40. So as I said, there's a particular way this is looked at for calculating the jobs being added. So it's determined by comparing the monthly average over the year of full-time equivalent jobs subject to Georgia income tax withholding for a given taxable year. And that means a W-2 person. So you're going to compare the average of the W-2 folks for a given taxable year, whatever year you're talking about, corresponding period of the prior taxable year. So if you're talking about the business was only in existence for 5 months, they're not going to have a prior year to compare it to because they weren't in business but 5 months of the current year. So the certified entity which begins operations during the taxable year may be able to base initial eligibility on a period of less than 12 months. So that's what I was saying. Say the business comes into existence in July. They've only got 6 months of that year that they're in business. So they're not going to be able to compare year over year to get their ads for that year of full-time equivalents. They're just going to look at the year that they've been in business for 6 months or 5 months or however many months. Anybody got a question on that? I know that's a little clear as mud. Okay, so we're gonna look at the ITRZ form. This form is several page form. I believe it's 4 pages. And it must be attached to the businesses or the individual, whoever is claiming the credit, whoever it comes down to is claiming the credit on their tax return. It's going to be attached to their tax return. In addition to, as I stated, the certification form that you as the local person fills out, the local contact, the local person.
Team leader.
Thank you. Ugh. Those kids this morning got me in a tizzy. So the local team leader will fill that out. That certification form and the 2-page letter plus this form must be attached to anybody taking the rural zone tax credit in order for them to take the credit. If something's not attached, they're not going to allow the credit. You'll be able to work through it, but it's just going to be a speed bump you don't want to deal with. All right, so as you can see on this form, they're going to fill out the name, the address, the city, the contact person, their identification number, whether it's a federal ID number for a business or the social security number for an individual. And then they're going to fill out the type of business that is filing this ITRZ form. So it's going to be a partnership, LLC, a C Corp, an S Corp, a sole proprietor, or fiduciary, which would fill out a trust return. They're going to put their tax year ended, which probably like 12 of 2018 or 12 of 2023, whatever. Then the first part A, is only going to be filled out by a certified investor. So they're the ones that are purchasing property within the rural zone. They're going to fill out the address of the investment property within the rural zone and the name of the eligible business located in the investment property. So this is the business creating the jobs. If there's more than one, go ahead and list more than one. And I'll get to that in a frequently asked question. But say one business creates one full-time job and another business in the building creates another full-time job. Can the investor take their credit? The answer is yes, because 2 jobs were created in their investment property. But individually, the business creating one job and the business creating another job don't get to take the job tax credit portion of the rural zone tax credits because they haven't on their own created 2 jobs. So in order for anyone to take the job tax credit of under the rural zone, you've got to create 2 net new jobs. But if they don't create 2 net new jobs, if someone in the building doesn't create 2 net new jobs, then nobody takes the credit. But if more than one business end up creating 2 jobs or more, then the investor is able to take their investment credit. And there's a slide written on that with that frequently asked question, and we'll revisit it at that time as well. So it kind of, like I said, hearing things more than once sometimes helps me understand it or be able to ask a question about it. So the investor is going to put their purchase price down. They're going to multiply out 25% of that. And then as long as it doesn't exceed 125, then that's their credit. If it exceeds 125 and it's say 250, then they still get 125 of the credit. They can't exceed 125. So you can turn to the next one, Sheree. So this continues the investment person's portion of this form. So number 5, they're going to put their credit amount, whether it's the 25% or the 125,000, whichever's less. Then they're going to divide it by the 5 years, and that's the maximum amount of credit they're going to be allowed for 5 years. Now, this is the form, guys, that I was saying that you must have the final numbers on there. Say something came up and there was an additional cost of purchase and it didn't make it on the certification form. it must go on this form if they're going to expect to get the full amount of their purchase price in their credit for 5 years. So then we'll go down to section B. This is for the rehab folks. Folks that are rehabbing the properties are going to fill out this part B. So they're going to fill out, I know it's hard to see because it's kind of small, but they're going to fill out the street address of their qualified rehab expenditure address within the rural zone. Then they're going to go down to fill out their amount of their qualified rehab expenses. They're going to multiply that by 30%, and so long as that doesn't exceed 150, they can take up to 150 or the amount that they've spent, whichever's less. So they're going to put that on number 6 and then divide it out by 3 years. So they're going to take their credit over 3 years. Now, again, if on line 2 doesn't exactly match the box on that, the certification form, it's okay. What is on this form is Bible. This is what's going to go through DOR and be accepted as the rehab person's amount of credit. I think you can turn to the next one.
Sorry.
All right, this is where we're going to do an example. This page 3 and page 4 are what the person taking the job tax credit is going to fill out. So the investment or the rehab person are merely going to put on a line on their section how many full-time equivalents they're going to, that have been created in their building. So that's what this part C is only going to be filled out by the person taking the rural zone job tax credit. There's page 3. You can move on to page 4, Sheree, because we're going to revisit it once we do an example. So there's the next page. And as I said, it'll come down to line 14. It's going to give their amount of credit by year. Okay, so you can go to the next one. So in summary, this is what is going to be on this page. I guess it's a 5-page form. I apologize for calling it 4 pages. So if you're filled out part A or part B, so if you're an investor, a rehabber, or part C, a job person, creation person, you're going to put that total amount on line 1. If you had a prior year carry forward, you're going to add that in. Say this is your 2nd or 3rd year and you didn't get to take all of your credit in that 1st year, 2nd year, whatever, you're going to put that amount on line 2. You're going to add those up and enter your, go back, sorry. It's okay. Enter your income tax liability from your business, from your individual return, whoever's filing this ITRZ, and you're going to add or subtract. You're going to subtract and then hopefully have some left over to carry forward or use it all up. So you can use that, any unused credit up to 10 years, as we stated. Okay, go ahead. So you need to, as team leaders, always check your acceptable NAICS code listings and make sure their address is within the rural zone. You'll know those addresses off the top of your head, I'm sure. So as Sheree mentioned, there's a vehicle in which to seek guidance in cases where the NAICS code is not on the listing. But as Sheree mentioned, you feel it's a business type of business you would want in your downtown. It's something everybody's on board with in the town, meaning the representatives of your town that have a say. So you're going to file what's called a request for determination. And this has got to be done before taking any rural zone tax credit, Because once the NAICS code is incorrect on there, DOR is gonna hand that back to you guys and say it's back to the person and say it's not acceptable. So we're gonna need to file this letter with the DCA commissioner here at the DCA before taking any credit. So it's gonna be a dated, signed letter, written in paragraph form, hopefully on company letterhead. You will not believe there's one of the big 4 CPA firms who has submitted requests for determination to me undated. Like it's never dated. Isn't that something you do in letters? Date it? Anyway, so it's got to be dated, signed, company letterhead, and you're going to outline in there. We feel like this business is integral to our, downtown development, and we want it there. And, maybe type of business, of course, will be listed, kind of customers typically served, and as always, include contact information and being as descriptive in the letter as possible. And you're going to either snail mail it to the commissioner none, or you can send it to that OED email address and it'll get to us.
Probably
Any
better
questions
to
on that?
probably better to send it to OED or either send it
Near you.
directly to me or you. Yeah.
That's fine. Yeah, snail mail, nobody's in here enough to, well, assistants are, but. Okay, think you can. Wanted to go, I guess, where's my example? Oh, I do FAQs before example. You want to go to the example?
Yeah,
Next, I'd rather do that. I'm sorry, I didn't put it in the right order. I think it's
Okay.
that slide on my thing too.
Okay, hold on. Let me get to it.
It says counting jobs FTEs is the title. There, okay.
Okay.
So the 2 FTE jobs need to be created within the same tax year. So we can't have one in one year, one in another year. It's kind of what Sheree and I alluded to before. You're not going to get to count any of the jobs. And it won't trigger anybody else's credits. So the law of averages occurs when that ITRZ form is submitted with the income tax return when the job tax credit under the rural zone is being submitted. They're trying to be claimed. With the way this form works, to calculate the net new jobs or FTEs created, serious consideration needs to be made for the amount of time a job is in existence. So as I said in the above bullet point, it comes down to the law of averages. Whether you're open 5 months, 12 months, you're going to have to divide out your jobs by that number. So, go ahead.
And this really is for when you're thinking about existing businesses. It's not a new business because like we said, it doesn't matter what time of year a new business opens, those jobs are new for that business. It's really talking about when existing businesses hire new employees.
And if someone doesn't have any W-2 folks and say they're just the owner and they don't get a W-2 and they're working it for a while, you need to be sure that, because then that business may be in existence for 10 months, but you've only got employees for 4. You're going to have to divide out by 10, or the business is going to have to divide out by 10. So they may not reach the threshold required. So my advice to you guys as team leaders is to have the business review and mock up an ITRZ form, particularly pages 3 and 4. Even if this part of the form will not be used to take advantage of the credit related to the job creation, this has to be, it has to net out to 2 net new jobs for anybody to take their credits. So, it's better for them to get with their CPA or accountant in order to maximize the potential for the jobs to be allowed and to be counted for purposes of the rural zone program, in addition to triggering the credits for the investment folks and the rehab folks if they're not the ones doing the hiring. Okay, I think you can go to the next one. As I mentioned, comparing the monthly average of full-time equivalent jobs subject to Georgia income tax, meaning W-2 folks, for a taxable year with the corresponding period of the prior taxable year for existing businesses. The certified entity, which begins operations during the tax year, will not be subject to the 12 months. But if it's an existing business, they've got to make sure they add the 2 jobs for everybody else to get their credits. So it's quite important. All right. So go ahead. Did someone have a question? Do you have a question?
Yes,
Anna,
so,
go ahead.
yes, I'm still stuck on the existing part and just want to, but I think I've got it now. So if he has not been collecting any income come January 1, he would be considered one of the 2 new employees. And if he has not filed W-2 until, because a lot of these, what we have in Comer is they're there. A lot of them have done most of the rehab work, but they're not paying themselves really, right? I mean, and they're definitely not
Right.
filing a W-2. So they're going to be considered net new jobs after
Yes.
January 1.
They won't even be considered a job if they never get a W-2. Because a lot of times
Right.
if it's an LLC or a partnership or an S corp, it's flowing through to the shareholders, members, or partners. So they'll get
Yes.
a K-1. They won't get a W-2. You know, that's how they get their income. They get distributions and that and the like. So
Exactly.
they will never be considered an employee unless they get a W-2.
I gotcha. Perfect.
You can go on to the next one, Sheree. Okay, so here's an example. We've got a business in Decatur County. I think that's Bainbridge, right?
Mm-hmm.
So they're going to put the month and the year. I know I filled out 2021, but I was initially filling this out for 2020. So let's just kind of not look at 2021. We're going to look at, this is an existing business. They were in business in 2019, but we're looking at tax year 2020. So all through 2019, they just had 2 employees, and every month they look at their count. And I've got to look at the regs, but I know for the regular job tax credit, you can look at it 2 ways. You can look at your last paycheck of the month and count those employees that would count, or you can look at the quarterly Georgia filing where you have to put down your number of employees and say there's 5. You only take from there the folks that meet the requirements of being an FTE to go on here. So say you have 5 employees, but you only have 2 FTEs, then only 2 would go on this form. And the CPA accountant person filling this out should know that, but should someone come to you with some questions, you know, direct them to Sheree or myself or their CPA, or we can all jump on a call or something. So anyway, so they've had 2 employees all through 2019. You can see that through all the 12 months. Then you come down to section 3, line 1. So their total full-time equivalent jobs are 24 because you've got to count it each month, as I mentioned. You're going to divide that by the number of months in operation, which, as I said, this is where the law of averages comes into play. You know, in this column, not necessarily because it's going to come out to 2 net new jobs, but we can move on to 2020. They kept 2 net new jobs for January and February. Well, then come March and April, they moved to 3 jobs. May and June, they moved to 4. July, August, September, October, November, and December, they had 5 net new jobs. But because they have 5 net new jobs at the end of the year, doesn't mean they're going to get, you know, the increase of 5 over 2. So we've got to go down to the rest of the computation. So we're going to add up all those on lines 1 through 12, and that totals 48, which I've put down on section 3, line 1 under fiscal year ended 2020, which is also called year 1. Prior year, as I said, since they are a business that was in existence in 2019, that's going to be their prior year to them claiming the roll zone credit in 2020. So their prior year but 2019, even if they were existence in 2015, it doesn't matter. For purposes of this credit, they're only going to do 2019 and 2020. So they'll take the difference on line 3 between the 4 and the 2, because they've added jobs. Remember, they're at 5 at the end of the year, but it only comes out to 4 because of the time frame of them adding jobs. When you add those up and divide them out by 12 months, that's where the law of averages comes into play, and it only totals out to 4. So they're going to take the prior year 2 jobs, and they're going to subtract that off of that 4, and they'll come out to 4 net new jobs. So then go down, Cherie, to the next slide. We'll go back to this one in a minute. So they'll carry that down on line 6, the year 1 increase over prior year. So their year 1 increase of 2020 is 2 net new jobs over 2019. They're going to carry that down to section 5, line 11, and they're going to multiply that by the $2,000 job tax credit amount. So as long as it doesn't exceed that line 13, then they'll get to take the full 4,000 down there on line 14. And then that goes back to that section where it said, you know, on this ITRZ form where it's got A, B, and C, and you add up all your numbers, 4,000 would go there for this case, if they're only doing the job portion of the rural zone credit. Go back one, Cherie. Does anybody have any questions on this so far? I know it's a hard once you get this concept, then it'll be easier to explain to folks when they're hiring.
I think I had a question on the second page.
Okay, go to the, thanks, Cherie.
And I know that I might be leaping ahead here, but I see that you have year 2 filled out and you carried over year 1's increase, and they get to claim both of those credits. I just want to make sure that I have it in my notes right. So when they begin claiming any credits, say if it's year 2, they can still claim that for 5 years total.
Correct.
And then if they layer them up in a way, then they can maximize themselves on year 5 and have every year claim the job tax credits for every year that's increased.
Yes. And even if they don't increase it by 2, they don't have to increase it by 2 every year. If, say, in year 2, they only increase by 1, they still can take that credit because they've created the 2 in year 1. They've created what we call a year 1 and what Department of Revenue calls a year 1, a valid year 1. So that opens up years 2, 3, 4, and 5 for them adding as little as 1 job and to be able to claim the credit for 5 years on those. So it could extend out several years past the sunset of that rural zone if the jobs are created. Okay, go back to the prior page. Does that help you out?
Yes, that was
Okay.
exactly what I was needing.
Anybody else? Oh, I can't hear you. Sorry.
Maybe.
Okay, I can hear you now.
This
Nope,
is
I can't.
Wrightsville.
Sorry,
Hey,
it's somebody else.
hey,
Sean,
sorry.
I can't hear you still, hon.
Am I talking over somebody?
No, I can hear you, Hugh.
That's
Okay.
Hugh, yeah.
So if year 1 is just investment and rehab, and the jobs aren't created until year 2, say 2023 is nothing but rehabbing a building, purchasing and rehabbing, how could they still do those rehab credits? It would just have to be in 2024?
Exactly. You've got to wait till the jobs are created. Then that opens up the credits to be had. And it's okay that the jobs, you know, because sometimes it takes, you know, with COVID, God only knows how long it takes to get something rehabbed and completed or a deal to go all the way through. So the key is the jobs being created with an acceptable NAICS code, and then that triggers everybody's credits. So then they still got 3 years. They've still got, you know, for the rehab or whichever one, and then the 5 years. Even if it extends past, the 5 years extends past the sunset of the rural zone, they still get to take it, even if it's in the last year of the rural zone that it took, you know, 4 years to create jobs. Then they still get their divided by 5. They still get to take it. It just will extend past the sunset of the rule zone, meaning you can't do any more rehabbing or purchasing of and buildings and that sort of thing.
Trish, got a question. If the new jobs are added mid-year or toward the end of the year, would that year not qualify for the tax credits?
They're gonna have to go through the mock-up of that form because it may not. They may not qualify. And like Cherie said, we had someone that was very angry that did not qualify based on when they hired jobs. That law of averages didn't work in their favor and they didn't get to take any jobs. And that meant whoever purchased the building, if it was a purchase or rehab, which I'm sure there was some sort of rehab, didn't get to take their credits either. They're gonna have to wait till another year, a subsequent year, when the jobs are created within the same year. And it nets down to that on the form. And since they're now an existing business, they have to make the comparison. They've got to make 2 jobs over however many jobs they had. So say they hired 5 and wow, they weren't going to really go up to 7, but they're going to have to trigger everybody's credit. So it could be a big wormhole of big goose eggs for everybody if the jobs aren't created within an acceptable NAICS code business. So those are, Cherie and I cannot reiterate that as much as possible. That's why I say they need to do a mock-up of that form with their CPA, with their accountant themselves, whatever, if they think they know enough about it.
Yeah. So if it's an existing business and they're talking about hiring new employees and it's October, tell them it would be in your best interest to wait until January 1 to hire those new employees, not in October.
Yeah, because they're
'Cause
gonna have to, fill out that prior year row to be year over year. And if, they've, lost a job and then hiring it back by the end of the year, that's not gonna help them.
Tricia, I had a question. It's Michael. Can you hear me?
I can, Michael. What you got?
So if we're starting this in January 1st, 2023, just to make sure to clarify someone qualifying or not. So someone buys a building in 2026, takes a year to rehab it, so they don't start the job, hire anyone till 2027 in January, which is the last year. They only get those job credits for 1 year. Can they still take all of the building? Do they get to take it on
They
for
can
an
take-
additional 4 years?
They can take the building the full amount of time, and the job tax credit person can take the full 5 years. Even
Okay.
though
As
it's
long
the
as the
last
jobs
year.
are maintained.
Yeah, as long as the jobs are maintained, they can take it. And even if they create a new job in the next year, Cherie? No, they can't. Okay. Sorry.
It's just got to be, as long as the business is started and the 2 jobs are hired and maintained within the 5-year period from 23 to 27 is what they would still get to take all 5 years of the prorated building purchase and all 3 years of the rehab credits. It would carry past December 31st, 2027.
Yes.
As long as they start it before December 31st, 27.
With the 2 jobs.
Okay.
Yes.
Just
yes.
making sure they wouldn't only
Yep.
get 1 or 2 years of the
No.
rehab and the building credit. So
That's not
Okay.
fair. That's not fair
Right.
because, like I said, sometimes it takes longer time frame to get something rehabbed.
Yeah.
I know that I have a rental property and it's like pulling teeth to get anybody to come out and give us estimates for
Yeah.
flooring to be redone or replaced. It's like you sign up 3 people and maybe 1 shows up and nobody ever calls you back. So I think that was even before COVID, but COVID's made it even worse. Let's blame everything on
Just-
COVID.
Thank you. Just making
You're
sure we wouldn't miss some of that proration for some of those years. So that helps.
And Cherie, the way that ITRZ form is, it goes out. So I don't know for the jobs, I don't know what DOR is talking about. It may be something we need to revisit with the other open item with them.
Yeah.
It makes me mad. It's not right. Okay, so let's see.
So
Go back.
Trish Taylor, I see that you joined us, and I know I had you coming on at 10:45.
I'm
Are
sorry.
you okay? Because Trish has about 15 more minutes, 10 more minutes. You're good? Okay. Thank you.
Thank
Can I
you.
ask one quick question?
Sure.
Okay, and you may have answered this and maybe I just missed it. So let's say a business owner hires somebody in January and that person quits in March. And then they cannot find a replacement again due to COVID and workforce. If they cannot find a replacement until June, but it's no fault of their own that they couldn't find someone to fill that position and they were still willing to pay to fill, to keep that position. Do they not get credit for that as well?
Well, the good part of what you're saying is it sounds like most of the year they're going to have that person. They're just going to have to make sure it's two. Oh, you're saying, so say it's the next year and one of the two is falling off?
Yes,
Right, because
they're choose
Say that
because
again.
they've chosen to quit
Okay.
or they've quit the position, but the business owner has difficulty filling the position again. Does that make sense? Like what
It
I'm
does.
asking is
It does.
if the position cannot be filled due to lack of personnel, but the business owner is seeking to fill that position, are they going to lose the opportunity to have tax credit for that?
Unfortunately, everybody loses out that year. So out of their 5
Gotcha.
years, they're only going to get 4 years of their job tax credit, and the rehab and the investor person cannot resume taking the rest of their credits until the 2 jobs are in place.
Okay.
I know, and that's stinky.
So how do you, I guess this is a bigger problem. This is a bigger question. How do you ensure retention of quality employees? I guess that's what I'm getting at. You might have somebody that's willing to work for 6 months or 3 months or whatever it is. How do you help businesses recruit and hire people that are going to stay long term?
I don't know what to tell you on that. It's just,
You can. You
Yeah.
can. I mean, it's not your responsibility. I mean, something that we've kind of done, I try my hardest that if someone comes to us and like, hey, I'm looking for a job, if I can facilitate them to the right person, that right connection, totally go about that, help that business out. But you can't take the weight of trying to find employees for your downtown businesses. You have way too much to worry about. Not that that's not important, but it's not your weight to carry. That would be my thought.
Gotcha. Thank you.
thanks, Lauren.
Any other questions?
I wanted to touch on the question that was in the meeting chat.
Yeah,
So,
so the one
someone-
from Jenny Beth?
dues, and I'd understand that they are required for the job creation element, which is required for any of these credits, of course. My second question would be, for example, a restaurant currently, say they do have their employees on 1099s and they decide to switch them to W-2s for this next year after January 1, that those would be considered job creation, correct? Even though it's the same employees, they're just switching the way that they're on payroll.
They
Uh,
would, right, Trish? Because they're going
That's
from
what I would say.
1099 to W-2?
I would say yes.
I like that answer.
Because if they do the prior year and the current year, when they fill out that ITRZ, they're not going to have anything in there.
Exactly. Okay.
And even if you had 0 on there and you divide it by 12, it's 0 because the only folks that go on that ITRZ are the folks qualifying as FTEs or what have you. So I would say yes.
All right, you ready to go back, Trish?
And I mocked this up for one, go back to the form. There. I mocked this up for 2021 as well to show that, look, they got up to 8 jobs by December of 2021. And so then you add that up, it's 75 and you divide by 12. So that's only 6 jobs. It's not like the 8 that they have hired by the end of the year because of this law of averages. So again, it unfortunately turned out to be 2 again. So it kind of just looks so similar, but I just wanted to point that out. And if you go on, which I didn't fill it out, into 2022, and they were 8 jobs all throughout the whole thing, it's gonna still just come out to be 8. It'll come out to be 8, obviously, because that 12 times 8 divided by 12 is 8. So then you would subtract the 6 jobs off there, and unfortunately it's 2 again, but if it was 1, then they would get to take that as well. So that's what I'm saying, is that it's just the law of averages is very kooky crazy, and you gotta have them mock that up. Okay, go back to the FAQs, I'm sorry. Some of them I'll jet through, but some of them I want to, sorry, there's a lot. This has been since we've been doing this program, we've been gathering these. Okay, that's the first one.
That one is?
I want
Okay.
you guys to keep in mind to tell the business owners that allowed costs associated with the rural zone tax credits are based on rehab, not any costs associated with starting a business. So this is rehab of the building and getting the building ready for them to occupy it for their business or for the investor rehabbing it or the like. So it's just not any costs associated with starting a business. It's based on the rehab costs, which are labor and materials. Go ahead. You can go past that one. We answered that already. Keep going. Okay. This is my advice also. So in the case of any of the credits, the entity not creating the FTE/jobs needs to keep a good rapport with the job creator over time so as to comply with the 2 FTE requirement and finding out about if they've met the requirements. So the owner will have to check in annually with the tenants, be sure the jobs are added, maintained, that kind of thing. So you want to make sure that the lines of communication are open so that you guys, the business owners, can get the information they need to be able to take their credit. So, and I want to let you know that the credits are subject to Georgia Department of Revenue audit at any time. So make sure copious business records are kept. Proof is not submitted. We've got this question. Proof is not submitted with tax filings, but if they choose you can choose one of your businesses and they come and audit the business and something's not in order, they'll just disallow the credit. So it's very important to make sure copious records are kept. So can I combine this job tax credit with other job tax credit designations under the job tax credit? We kind of addressed this. So they cannot combine the job tax credits from the rural zone and the regular job tax credit program. However, if new jobs are located within the designated state opportunity zone, military zone, less developed census tract, or the tier designation yields a higher credit, then the business can take whichever credit is more applicable or more beneficial to them. But they just need to make sure if they're taking the regular job tax credit, that is also subject to audit at any time by DOR. So they need to make sure that they meet the more stringent requirements of the regular job tax credit program if that's what they're going to take over the rural zone job tax credit. And the job tax credit has minimum hours worked, minimum pay requirements, and they must offer health insurance to their employees. They don't have to pay for it, but they have to offer it. And it has to be like not marketplace, not Obamacare, none of that, or a stipend. It has to be actual insurance. So, as I said, they can take the job tax credit if they so desire, but they've got to meet those requirements. And then that, of course, will allow the rehab or the investment credits to be allowed to be taken. Go ahead. All right, this is another one that we received. It says, we received a rural zone certification for a client last year. Now that the final acquisition and rehab numbers are finalized, should the application be amended, or do we just file the final numbers on the tax return? And that's what I've been saying all along. The final numbers go on the ITRZ form filed with the income tax return. And as to restate again, the 2-page letter from DCA and the rural zone certification form must also be attached to the tax return with the ITRZ form in which the final numbers are on. So this is restating that if you can't use all your tax credit, you can carry it forward for 10 years, but the business is not allowed to do a carryback and try to take tax money from a prior year that they paid in. So they're not going to be
And
allowed to do
you won't get a
carryback.
refund check.
Right. They won't do, the only time you may get a refund check is if you do an amended return and you've already paid the tax in and you're just going to get the credit instead. So, okay, go ahead. That's another can of worms. This is what you were mentioning. I forget, Laura, maybe. If the business's number of employees fall below the required 2 FTE jobs, what happens? The income tax credit shall not be allowed during a tax year if the net employment increase falls below the number required. However, whenever the employees increase back to 2 FTEs in a year before the 5-year window has lapsed, then the employer can resume taking the tax credit again. Also, the tax credits generated and utilized in prior years for the tax year in which the net employment increase falls below 2 FTEs will not be affected. There's no clawback or anything of that sort. Each year is independent of the others. And I mentioned this, but this is a slide that kind of explains it a little bit better. If there are 2 businesses located within the investor property and one of the businesses employs 1 FTE and the other business employs 1 FTE, can the investor take the investment and or rehab tax credit? Yes, since the 2 FTEs were created within the 1 building investor property, it's allowed. However, the businesses are not eligible to take the job tax credit separately because they have not each independently created 2 FTEs as required. Go ahead. Sheree mentioned the rehab tax credits. Oh, no, I don't think we had this. Can rehab tax credits be used to pay for demolition of a deteriorated building? As a general rule, the tear down of facilities within rural zone will not be permitted to claim rehab credits. Of course, you have the option to file a request for determination on that if you think otherwise. Materials and labor are the only ones that qualify for the rehab tax credit. Okay, we talked about that one. Can a person who purchased and rehabbed a building but does not receive W-2 qualify as a new job? No, the person cannot count themselves as an employee if a W-2 isn't received. We've gone back and forth with DOR on this, and that's how they look at it. The 2 owners of the building start a management company that will be doing the build out. Can the owners be the 2 employees required for the first year until other positions are created? They cannot be the jobs created. The businesses in the purchased and or renovated spaces would create the jobs. How would the tax credits apply in a scenario where a corporate office is housed in the rural zone, but auxiliary space is outside the zone? Can the jobs from the corporation that operate outside of the rural zone be counted for the credit? The corporate office would not be able to take the rural zone. tax credit. The auxiliary
So it says it
would be
would.
able, I'm sorry, would be able to take the rural zone tax credit. The auxiliary space would not be able to take um, the rural zone tax credit. However, the auxiliary space may qualify for the regular job tax credit if all the requirements are met. If the investor purchases a property, rehabs the building, and the lessee also does repairs and renovations, do they both get to take the RZ rehab credits? Yes, as long as the rehab expenses occurred during the rural zone period. We already chatted about, we drilled that one in. There's a large building with more than one business that leases spaces in this building from the owners. If the business one creates 20 jobs, the maximum, and the business two creates 20 jobs maximum, can each of the businesses claim 20 jobs for the job tax credit portion each year they meet that threshold? Or is it a maximum of 20 jobs created in one building? In this case, each business is subject to the limitations of the rural zone program, not the building. So each business would be able to take the maximum number of job creation credit. Oh, can the existing owner of a building within the rural zone district qualify for job creation tax credits and rehab tax credits without an ownership change taking place? Yes. In order to trigger any of the rural zone tax credits, 2 net new FTEs must be created in a location within the rural zone. In order to qualify for the rural zone investment tax credit, the building must have been also purchased within the 5-year rural zone window and has at least 2 net new FTEs created during the rural zone 5-year window. If the business owner, even if the building wasn't purchased during the rural zone 5-year window, makes improvements and has at least 2 new FTEs created during the rural zone 5-year window, the owner may qualify for the rural zone rehab tax credit. Also keep in mind, the business creating the FTEs must be an approved NAICS code. This one will make a little more sense when you read through it without me running through it so quickly. Go ahead. Sorry. In the event of time. Okay, this is some feedback we've gotten from rural zone tax credit folks, that some of the rural zone tax credits are being disallowed by DOR because taxpayers are not including the form ITRZ with the return as required, or the form is incorrectly completed. So you've got to make sure you fill out the form correctly, the ITRZ, and attach the other documentation. It says they're also failing to include documentation every year the credit is claimed as required. So you've got to attach the certification form, the 2-page letter, and the ITRZ, which is 5 pages, to any return in which the business is claiming the rural zone tax credits, or the individual, however it shakes out. The owner sells the property, would they be penalized for previous tax credits used? Would they owe anything back? No, each tax year stands alone. There will not be any clawback on prior years filed. Also, moving forward, their rural zone credits would end once ownership changed. However, a new owner may, based on additional jobs being created since their purchase of the building, have the ability to take some rural zone credits themselves as long as new FTEs were created once they own the business. With the investment and rehab tax credits, are we understanding correctly that the 2 full-time positions can be either existing employees or newly created positions? Also, to further understand, if one person makes the investment or rehab and a business rents and creates or maintains the full-time positions, do they both qualify? So the 2 net new FTEs for the rural zone must first be newly created, and then second, may be maintained in the 4 consecutive years following the initial creation year. If one business makes an investment or rehabs a building, and that second business creates the FTEs, then they both will get to take their respective rural zone tax credits. There is a pizza company that has a location in a rural zone and one in another rural zone. Some of their employees work at both locations. How would they count these jobs? Would each location count them as a part-time employee? So the business in this case needs to keep track of the hours and employees by location and then count each employee based on the hours at the location. This way, they'll be able to count who is at each location as part-time. Get something maybe. Okay, if a business status is an S corp, these are all questions we've had over the years of working this. May not apply to some of you guys, but some of these might be useful to you guys as well. If a business status is an S corp, would that business be able to apply? If so, how would that work? Would each of the 3 shareholders make an application for a 1/3 cost of the rehab project? So the certification form needs to be in the S corp name when the local team leader fills it out. So once the S corp tax return is completed, K1s are generated as part of the return. Each shareholder of the S corp receives a K1. So each of the 3 shareholders are going to receive a K1. And they would apply the information on their K1, which would include the rural zone tax credits, to their individual tax return. Rural zone tax credits would flow through to the shareholders of the S corp via the K1s issued as part of the tax return of the business. So the business is establishing, when that return is filed, the S corp return would establish that rural zone tax credits are earned, being passed through. So then the individual returns, when they process their returns, their K1s would show which portion they get of the credits. So any flow through entity will calculate the amount of credit for each shareholder partner member based on their year ending profit or loss percentage. What happens if an owner purchases, renovates multiple properties within the rural zone? So the owner entity would be subject to the limitations of each credit. Each credit is different. So the job tax credit is $40,000 per taxable year by each certified entity. The investment credit is per property for the 25% of the purchase price not to exceed $125,000, and the rehab tax credit is the amount of the tax credit per project shall be 30% of the qualified rehab expenditures not to exceed $150,000. So each of those credits have different limitations that folks need to be aware of. That's it. That goes back to our example. Sorry, guys. Sorry I went over. There's a lot to cover. Any questions?
I think the main thing to remember is we don't expect you guys to remember all the stuff that Trisha just said, because I don't even know all the stuff that Trisha just said. But we wanted you to hear it so that you could remember and refer back to it. But just always know that Trisha and I are here. I can always be reached about any question. I think if you have, if you're on the phone with one of your business's CPAs and they have a question specifically about taking the tax credit and filling out that form ITRZ, then I would send that CPA directly to Trish for assistance. So I would not be able to assist.
And the hope is that if you hear something, that some of that triggers you saying, oh, I think we had a slide covering that. Let me look back at my notes. Or reach out to us. Either way.
Yeah. All right. Taylor, are you ready? I'm going to stop sharing so that you can. So Taylor Smith is what's your title?
I'm the Economic Development Coordinator for the City of Thomaston.
Okay, so he has been a Rural Zone team leader for 1 year, and I asked him to please come and give y'all some advice on, how to get started and what he's learned over this past year and what best practices that, he's figured out and that kind of thing, just to pass along that experience and knowledge to you guys. So Taylor, take it away.
Yeah, no, and thank you guys for inviting me to be here today. This has been a learning opportunity for me this past year. I do want to reiterate one thing first. Trish and Cherie, they are resources. Use them both. They are valuable resources. If you have a question, if you need anything, reach out to them. They're not going to turn you down and say, hey, we can't answer that. They're there to help you. Okay. That's what this program, they want to see this program be successful. DCA wants to see this program be successful. We want to see the rejuvenation and revitalization of downtowns across the state. And that's what this program is about. So Taylor Smith, City of Thomaston. So Thomaston is about an hour and 15 minutes south of Atlanta. 45 minutes west of Macon, about an hour east of Columbus, about 45 minutes from LaGrange, 45 minutes from McDonough, 30 minutes from Griffin, kind of centrally located South Atlanta between Macon and Columbus. Thomaston was a big manufacturing town, big textile town. NAFTA was signed. We lost 5,000 jobs. I'm from Thomaston. I grew up here. I experienced this community going through that it was devastating. I mean, it wasn't just the mill jobs that we lost. It was these mom and pop shops that made Thomaston unique. It was the shops along the square, you know, the men's stores, the women's clothing boutiques, the restaurants that they counted on the mill jobs to support them. And when the mills left, they had no one to support them. So downtown Thomaston, you know, for the better part of my childhood was just a lot of empty storefronts and government offices. In the past, I left in 2015 and moved to Carrollton, Georgia. Great downtown, obviously a gem for the state of Georgia. And I also moved to Monroe, Louisiana for a couple years. In these past 7 years, prior to coming back last year, Thomaston, especially with COVID, started to see some of that growth, right? We're close enough, but we're also far enough away. We're seeing a lot of people come from Henry County, Fayette County, Clayton, Coweta. Had a group come together and go down to tour Bainbridge, Georgia, which again is a rural zone community, to kind of figure out what they had done to revitalize, rejuvenate their downtown. And so come to find out they were a rural zone community and they had capitalized on this program. And the flashing lights said, hey, Thomaston needs to become a rural zone, right? So this was in 2019, I believe. 2020, the city undertook the start of applying for the rural zone by beginning a master plan and market analysis. So I came in June of 2021. So tail end of the market analysis master plan, beginning of the rural zone application process. So finished out the rural zone application process, finished out the master plan, and we were awarded. Fantastic. What do you do now? COVID was still going on. So thankfully, DCA allowed Cherie to come down last December, and we had a lunch and learn at one of our downtown event centers. And I would say we had it was a packed house. It was almost 100 people it was packed, you know, from bankers to real estate, you know, people to attorneys to CPAs to local leaders. You know, we need to tell you about this program. We need to tell you about how we're trying to just bring our community back to life. It was a great opportunity to share, you know, not just the rural zone, but also kind of the plans that we have for downtown Thomaston, our master plan, and just get that excitement going. So I'm going to share my screen real quick and kind of take you guys through a typical sit down with a prospective business, some of the marketing materials that I've made utilizing ECG's. We're an ECG community, so they provide us with marketing help. So they've helped me come up with a couple different flyers. You know, also some data that I share with prospective business owners when they're coming to town for my market analysis. Really, just kind of laying that plate for them of all of our incentives, our opportunities, XYZ. And then I'm going to talk about, you know, some of the things that I've learned this year and my next steps going into 2023. So I'm going to share screen. Okay, share. Okay, you should be able to see my face. Okay, can you guys all see this right here? Rural zone or economic development page?
Yes.
Good. Okay, so this is our City of Thomaston economic development page. I don't particularly care for it just because I don't like the website company that we use, but this is what I have. So made this last year when we got the rural zone designation, got a couple of different things on there, Thriving Thomaston Flyer. I'll go over that. Some of our available properties, going to hit over that real quick. So scrolling down a little bit, we have all of our rural zone documents here, as well as at the bottom, you'll see our master plan, our market analysis. But generally when I have someone come and meet with me, we sit down, I kind of take several of these documents and make a little folder for them to go over during the meeting. The first one we go over is our rural zone flyer. So I worked with ECG, and let me go ahead and say this. If anyone needs me to send them these documents that they can retrofit to fit their communities, happy to do so. So this kind of just briefly explains the job tax credits, the rehabilitation tax credits, the investment tax credits, my information on how to get in touch with me, as well as goes into a little more detail about reaching out to your CPA, identifying the property, a step-by-step, what to do, how to do it. Rural zone map, I'm sure all of you have one of these. I actually attached ours to our available properties list. The goal long-term is whenever I do one of these to be able to pinpoint on this map exactly where those properties are. Still working on that. It's tedious and time consuming, and I'm a one-man staff. So this is what we have so far. But what I have done is whenever it is a rural zone opportunity, I make sure to highlight that on our available property list. And this is something new that we've started doing this year, just kind of highlight the properties that are available within downtown Thomaston as we're trying to revitalize and rejuvenate. Next. Okay, so this is something that we did this year. We have, from my perspective, I think we have a lot of entrepreneurs in our community that really don't know how to get started with opening a business, operating a business, the first steps. So I worked with ECG on actually creating a small business guide, starting a business, what to do, who to talk to, XYZ. I've got information, City of Thomaston designated rural zone community by the Georgia Department of Community Affairs. This is a click. So you click on this, it's going to take you right to our rural zone flyer. Really try to make things, and all of this is on our website. So it's all clickable, really try to target, the youth and make it user friendly. All of these are also links as well that will take you straight to that city website page, as well as all their phone numbers, and you've got some emails there. Really just something to help business owners getting started step by step, walking them through. As well as this. So this is from our market analysis. So whenever I sit down with someone, and they say, hey, I really think I want to start a restaurant in Thomaston. Fantastic. Well, when we did our market analysis last year, $30 million gap in full service restaurants. This kind of goes into further detail, talking about expanding dining and entertainment, how much square footage could be supported in new restaurant space, the challenges, with trying to open a new restaurant, goes a little further into other market potential in downtown, and then, kind of set some goals for us as far as targeting new business creation in downtown Thomaston. So those are all of my, documents that I use. And they've gone, it's gone really well. It's gone really well as far as, the response from documents, the education component. And then whenever I have questions, I try to CC Cherie on a lot of my rural zone emails, just in case they do have a question that I can answer. She kind of knows what's going on. Right now we're working on a package store. I'm trying to get this new package store coming into downtown Thomaston on board the rural zone, as well as Tidal Wave, who is Tidal Wave Car Wash. They're headquartered in downtown Thomaston. They have 5 buildings in downtown Thomaston, which they bought 3 new ones this year. So I'm really pushing for them to take advantage of these rural zone tax credits. So this is a great program. So far this year, I've had 4 new businesses take advantage of the program. My city manager told me I would have 5 the entire 5 years. So almost 5 in 1 year. We're going to keep kicking butt going into 2023. And this is how I'm going to do that. So something that, just working through this year and kind of, learning. Again, I'm in my first full year with the City of Thomaston as their economic development coordinator. First full year of the rural zone, so everything is still a learning process. But we've done a lot in 2022, and we've got a lot coming up in 2023. And I want to make sure that all of my downtown business owners are aware of the opportunities, whether it's rural zone, whether it's facade grant. We're also now kind of a part of the Archway partnership with UGA, and we've got some really cool opportunities with that, with our facade grant. So we've got some really cool projects coming with a downtown farmers market and a courtyard project as well. So what I'm going to do is I'm going to do a 2023 introductory packet for all of my DDA business owners. So that's going to include information about facade grant, information about if you need to. I'm over HPC as well, so our Historic Preservation Commission. If you do exterior changes on your buildings in downtown, you have to get a COA. So I'm going to have information about that in there. I'm going to have information about if you need to pull a special event permit because you want to shut down the spots in front of your business and have a food truck right there. I'm going to have information about that. Rural zone information for all of my rural zone businesses. Just really give way too much information to all these business owners. But my big thing is we've never done this. We've never really been transparent and open and informative to this extent with our business owners. And my hope is that, through this, we can really open some eyes and we can talk about, yes, if so-and-so, they were able to take advantage of the rural zone. And it's still a small town. This is Georgia, right? So we can say, Mrs. Jones over here, she was able to buy this building. She was able to get these rehabilitation tax credits and she created 2 new jobs. So she got all the rural zone tax credits. How much did she get? Well, I can't tell you, but it was north of $100,000. It starts to open eyes. Also, that they'll send you a calculator that kind of tells you, X, Y, and Z. If you do these credits this year, this is how much you can look at over the length of the time. Share that information. It's eye-opening. I mean, when people start seeing, if I invest $150,000 in rehab, I've got $250,000 in acquisition costs, as well as creating 10 new jobs, and they start seeing $150,000 in tax credits, $200,000 in tax credits. It's eye-opening, and it gets them excited. So I've done that. I've shared, if they tell me, hey, this is what my project's looking like, I go ahead and try to tell them, well, you're looking at this if you create this many jobs. And it's really just a good sales point. One other thing, I kind of want to hit on is Trisha was right in the sense that it takes time. It takes time for everything nowadays. I've got several properties in downtown Thomaston that are under renovation right now. Some of our biggest holdups have been with architects. We have one architect in Thomaston, and he is 6 months out on any new project. It's to the point where he is pushing all projects because he just doesn't have the time to do them. I mean, he's inundated, as well as contractors. I have one commercial contractor in Thomaston, certified commercial contractor. So when it comes to getting projects done, I see them. I know they're coming, but we're trying to keep momentum going. We're trying to keep the energy and the vibrancy and the positivity. And you just have to relay the message to your local officials, to your mayor, to your city manager. Like, look, it takes time. I mean, I've got a business in downtown that they should be open right now. They should. They had a full facade renovation earlier this year, and they were set to open in May. It is now December. It is now November, and they're not going to be open until the spring. And it's a downtown coffee shop and bakery and ice cream parlor and something that we don't have that is desperately needed. But with contractor delays and supply chain issues, they were 10 weeks out on kitchen cabinets. I mean, it's insane. So it takes time. Be patient, be persistent, keep pushing, keep following up. I mean, I've been working on Tidal Wave now since May, trying to hey, are you ready to sign up? Let's go ahead and get this form done. Even if you don't use them, they're there just in case you need them, right? Keep following up, keep being persistent, keep pushing this program because it is a great program. And it's helpful. And we're really starting to see the fruits of this program. And for us, this is the first year. So to think where we're going to be 3 years from now, 4 years from now, 5 years from now, it's exciting. It's exciting for me, and I hope all of you are just as excited because I know what this process looked like, applying for the rural zone, getting that master plan done, praying and hoping that, oh my God, can we get this program? This was my first big application when I took this job. So I was like, I'm not going to get it. I'm not going to get awarded the rural zone. I'm going to get fired after 3 months on the job. It's going to be awful. And here I am, 18 months later, and excuse my French, but we're kicking ass, and we're going to continue to kick ass moving forward. Stay positive. Stay upbeat, show your passion, be passionate about your community and the opportunities that exist in the community. And, don't get tied down with all of the small potatoes, because it's very easy to get lost in the small potatoes and lose sight of the end goal, right? And the end goal is downtown revitalization, rejuvenation, and business growth.
Thank
That's all
you
I got.
so much, Taylor. I really appreciate it. Do y'all have any questions for Taylor
Yeah,
about
happy to
getting
answer.
started?
I just appreciate you being willing to share your materials. Those are beautiful, what you created. One of the questions I had is there something that the DCA has for us to hand out to prospective investors, or should we just work with Taylor on getting his template?
Yeah, I'm going to talk about promotional materials next. So, and I have not sent things to y'all yet, but will after we finish. I'll go over those next.
And I kind of used that promotional material that they sent that to ECG as this is kind of the template we're working with. Can you take our city logo, put it on here, and then brand it for us?
Thank you.
Just out of curiosity, that organization you're referencing, I think you're saying ECG.
Yeah. Electric Cities of Georgia.
Okay.
So we're a power provider, and so we're a part of Electric Cities of Georgia, and they have an extension, economic development extension and research extension that provides services to their communities. And so one of those services is marketing. So whenever I need help with, because I'm a one-man team, right? So whenever I need help with creating some of these flyers and documentations, they help me put together that small business, the starting a business guide. They helped me put together our Thriving Thomaston flyer that talks about, growth over the last 3 years in comparison to the years prior. They helped me put together the Rural Zone flyer. I mean, they huge. But, if you don't have that resource, local graphic designers, that's something that I've really tried to take advantage of here. So when I came into this position last year, we didn't have a logo. The city had no logo, had no brand. So it's very hard as, I'm supposed to be the salesman for the community, and I have nothing that references Thomaston, that really sells the idea of Thomaston. I've seen other communities go and spend $60,000, $70,000, $100,000 to have an outside consultant come in and tell you, this is who you are, this is your brand. Number one, I didn't have the money for that. But number two, I don't like that, right? And it's different for me because I am from Thomaston. So I have, my experience growing up here. But I wanted to bring in other people that could also share their experiences, and we could work together on creating a new logo for our community. And so I would share on that, but it's just going to be hard. So I'll share it right here. So I pulled some local graphic designers, local artists to the table, and for $3,500, we've got a brand new city logo and brand. I don't know if you guys can see that right there. Thomaston, Georgia, this is home. So the green little, I guess, banner right there, that is from a Thomaston Peaches peach label from the 20s. Thomaston was a big peach community. The little mill water tower right there, that's from our mill. We were a big textile community, and then this is home. It's kind of a play on words. I think Thomaston's growing now because, like I said, we're close enough to the bigger cities, but we're also far enough away. And in today's climate, society, people are searching for that small town, hometown charm where you have Mrs. Jones down the street that's going to call you if she sees something that's not right, So for us, Thomaston, this is home, but this is community, this is art, this is business, this is fun. Thomaston can be anything you want it to be, but it's the home you're searching for. That was all done locally. I mean, I did that $3,500. That's unfathomable, to have a brand, a complete rebranding done for $3,500, and we were able to do that. So take advantage of your local resources. Another thing I did this year, we did a new conceptual for a courtyard project that was pushed with our master plan. I could easily call, one of these consultants. Hey, can you help me come up with a conceptual? Yeah, $25,000. Here it is. I don't have that money. Right? Small town, limited budget. How can I get something and it be, impactful? Well, just so happened to have a student at UGA in the landscape architecture school from Thomaston. I reached out to her and I said, hey, can you help me meet with our downtown development authority and let's discuss this plan back here. And can you help me come up with a master plan for it? $1,000. You can't beat that. And that's a plan that we're going to bond in 2023 and make that project happen. So take advantage of your resources, be different, look at stuff differently than you've been doing in the past. I mean, that's the big thing here. I left Thomaston and everyone's experience is going to be different, but I left Thomaston and I lived in other communities and I was exposed and I saw, hey, well, so-and-so is doing this and that's a really cool event, or so-and-so is doing this and that's a really cool business. Why not Thomaston? Why can't Thomaston have that? What can I do to create that in Thomaston? It doesn't have to be the same. We're not trying to recreate the wheel. We just got to get it rolling again, right? So let's R&D, rip off and duplicate, figure out how other cities are doing it, and bring it to your town and make it happen. And in the day, I mean, it's up to you to make it happen. I could sit here and complain all day long about being a one-man team and being in charge of all our city events and all our HPC and our DDA and Main Street and economic development. I'm thankful. I'm thankful to be in this position. I'm thankful to be home. I'm thankful to be a part of transforming our community. And, I exude that with my passion and whether it's in this conversation or with, Miss Jane Smith in the hallway, I exude that, and that's your sales point. You are the sales point. The program's just there to help, but you're the salesman.
Thank you, Taylor. Anybody else have questions for Taylor? All right. Thank you so much, Taylor. I really appreciate your passion and you giving of your time to share your experience with everybody.
Absolutely. Happy to help any way I can. Feel free to share my contact info with everyone. And if I can do anything to help anybody, reach out.
Okay. Thanks.
Thanks, Taylor.
All right. Give me a second to pull up our other presentation.
Y'all have a good one, guys.
You too.
Do you want to record this?
I think it's recording.
Okay.
Yeah.
I thought you stopped.
All right. Can y'all see that? It says Rural Zone promotional materials.
Yes.
Okay. So I think I said this at the beginning, but really, after being part of this program for 5 years, we've seen communities that have been very, very, very successful in getting their businesses to utilize these tax credits and getting new businesses to come into their downtown, taking blighted buildings and rehabbing them and, removing that blight from their downtown and just revitalizing their downtown by using these tax credits. We've seen other communities that have not had one business take advantage of it. I think the difference in talking to those Rural Zone team leaders that have been the most successful, the ones that have been most successful have said that they literally have walked information about the Rural Zone program door to door in their downtown. And they have done presentations at, Rotary Club or for their downtown business meetings to get the word out. You've got to promote not only this first year, but all 5 years to make sure that any new folks that have come into your community will understand the program and the benefits too. So, some of the ways to promote the Rural Zone tax credits would be to put an article in the newspaper, an article in the chamber newsletter or the DDA newsletter. We have handouts that I'm going to share with you. You could create brochures like the one that that Taylor just showed you. We do have a postcard, a template that y'all could use, signs, PowerPoint presentation that we can share with you that you could tailor to your community and use, and then of course to put information on your webpage. So I do have a Rural Zone press release. I mean, you may have already submitted something to your local newspaper. We did, DCA sent out this press release, but I do have that and I will share that press release with you so you can just share it with your local newspaper or radio station. We will also share with you a Rural Zone one-page information sheet. So this is what this looks like. This is what page 1 looks like. So it's a 2-pager, a front and back, And this just tells a little bit about the program. And then down at the bottom, you'd be able to type in your contact information so that folks can contact you directly about the program. And then on the second page, on the back side of this handout, is the map of your rural zone. So folks can check that map to make sure that they're located within the designated rural zone boundaries. And then on the front page, see a little bit about what the different tax credits are, and then be able to contact you for more information. So those have already been created for you, and I'll send those out after our meeting. This is another brochure that was created by ECG for the city of West Point. You know, I'm not sure if, I know Georgia Power has an economic development unit, but I'm not sure if they're producing marketing materials, but it might be worth asking Georgia Power if they would do this. If you're not an ECG community, there's also the Georgia EMC, and they could probably help you to produce some kind of brochure like this as well. But this is what some communities have done. This is a brochure from downtown Thomasville, just a trifold brochure that they were able to hand out to all their businesses in downtown, and that they also have available at the city office where folks go in to get their building permits. So when somebody applies for a building permit, then the person that works there for the city can hand the rural zone brochure out to them to say, hey, you're doing work on a building. If you're also going to create new jobs, you might be interested in this program. And so that's one side of the trifold brochure, and this is the other side. We also have this postcard. I don't know how many communities have used this, but I will send you out this template so that you can, if you want to send it around to all the businesses located within your rural zone just to get the word out, you can utilize that and personalize it as well. And then most all communities have put information on their webpage. This is for downtown Bainbridge, where they have different tax incentives listed that are available for their downtown, and they have rural zone tax credits here. You can click and go to more information about the rural zone. Under job tax credits, they have a link to the approved list of NAICS codes. And then, of course, they have their map of downtown, and then the contact information for their rural zone team leader. Also on Bainbridge's webpage, they are, singing their own praises. They're talking about what has happened with the tax credits. This is just from, this is back from 2020, so they've been in the program for 2 years. But they were showing how many job tax credits had been taken, investment tax credit, and rehab tax credits, almost 500 and about 20,000 in rehab tax credit. Then, of course, click here for some of Bainbridge's rural zone success stories. And they have before and after photos of some of their projects that have happened in the downtown. Amanda Glover was really good about doing presentations around the community to talk up the successes of the rural zone for downtown Bainbridge. In January of 2018, when they applied for the program, they had 41 vacant and vacant blighted structures, and it's grayed out, but the building behind this in the image of the slide is one of those buildings that was vacant and blighted. This is what the building looked like after it was rehabbed. And so by November of 2020, they were down from 41 vacant blighted structures, they were down to 15. Also, they had a 24% vacancy rate when they started the program in 2018, and then 9% vacancy rate in 2020. And these are some great before and after photos. If you look up on the top where it says Rich's Casuals, that's the before image. Go below it, that's the after. In the middle, that's the before on top, and then what it looks like after. And then on the right at the top, what it looked like before, and then what it looks like after. Same thing on this slide. I showed you the Fleming building earlier. Before, there's the before and after. Then the one in the middle, before and after. And then the one on the right before and after that is now a gym. So some great before and after photos. That's something for you to think about, is definitely, if you hear about a building being rehab, try to get some really good before and after photos so you can use those in your success stories. This is Perry's webpage, where she gives a program description of the rural zone and talks about the tax credits that are available, some links to get a summary of the rural zone program, click here for the rural zone building rehab standards. And then, of course, if you have any questions, you could have contacted Ashley Harden. She's no longer working for the city of Perry, but she was the rural zone team leader. And then there's the map of the rural zone. And then one of our communities, Monticello, had this sign that they created and put in their downtown vacant buildings, which I thought was such a great idea. So this property qualifies for the Georgia Rural Tax Credit Program, a Georgia tax credit for the purchase, the rehab, and full-time equivalents. Ask your realtor or contact the Monticello DDA for more details. I just thought that was a great idea to help promote the sale of that building, but then also to talk about the incentives available should someone purchase that building through the rural zone tax credits. So the other thing that we have is a PowerPoint presentation that we can send to you. We just call it Rural Zone Small Towns Big Impact. But we've made it so that you can add your name here. You know, if you want to give a rural zone presentation to, the Rotary Club, or you want to give it to your Downtown Merchants Association to get the word out about the program, this is something that we created so that you could use. It's just basically mostly the information that I gave in my presentation, but you can insert a picture of your city to personalize it. It talks about this being a 5-year designation. This designation will be in place until, for you, it's December 31st of 2027. Purpose, how it works, and then goes through the job tax credits, the investment credits, and the rehab credits. Just to give a brief overview, what the next step is. Here's Trisha's contact information. Things to keep in mind. Some of our frequently asked questions, but not very many. And then at the end, we have where you can put other incentives that are available, like say the Downtown Development Revolving Loan Fund, or if you're a Main Street city, you could talk about the Main Street program. If you have a facade grant, you could talk about that. If you have a local revolving fund, you could talk about that. If you have a local boost program, you could talk about that. So again, just personalizing this to talk about maybe all the incentives that you have available in your downtown, with rural zone tax credits being one of those. And then we just have some blank slides. So again, you can put what you want to in it. I also wanted to mention that on YouTube, we do have some recorded trainings. And today, unfortunately, I didn't get my part recorded, but we do have the rest of the training recorded, and we'll get this on here. But if you wanted to look back, like there's a slide called Ways to Promote the Rural Zone Program in Your Community, and you could watch that. That's from one of our trainings. We have tips for new rural zone communities from Cornelia's team leader, and tips for new rural zone communities from Perry's team leader. You may want to watch those. That's just me interviewing them and them talking about, just basically like Taylor did, talking about, things that they've done that have worked in their community. This is Introduction to Rural Zone and Other Downtown Financial Resources. So we also talk about Rural Zone and the Downtown Development Revolving Loan Fund, which is another program that I deal with. The State Small Business Credit Initiative is also talked about on there, so that might be of interest to you. Region 10 Rural Zone Info session. That was a session that we had down in Region 10 a couple of years ago. That rural zone orientation that's listed on here is the orientation from last year. And then the application workshop. You don't need that because you've already applied and been designated. But these trainings are on there. I am definitely going to send you a link to the rural zone orientation from last year. And I'll tell you at what point to start looking at this, but it is the video where Jesse Owensby, who is the rural zone team leader from the city of Cornelia, talks about what she's learned over being a rural zone team leader for the past 4 years, and now it's 5 years. And I think she gives some really good advice. So I will send out the link to that YouTube video, and I'll tell you at what point to start watching for Jesse's presentation, because I think it's really good. All right, any questions over promotional materials? Nobody?
You get that off.
Okay. All right, so now I'm going to go over the Rural Zone annual reporting overview real quick. This is one of the handouts that you have. The annual requirements for Rural Zone designation is that you have to attend annual training, which this will be your training basically for next year, even though we're doing it early, and submit annual reports that detail the steps that you guys have taken to facilitate business development and revitalization within the past year. And then also any private activities that have spurred revitalization efforts within the zone. And just so you know, like back in 2018, that first year when we got the results of the annual report from those first 9 communities, at the end of their first year, their average vacancy rate in 2017 had been 26.1%. It went down to 18.6 in the next year after they became rural zone communities. The number of parcels that were sold within those 9 rural zone communities in their first year was 72. The number of rehabs that took place in that first year were 48. The total number of new businesses created within those 9 rural zones was 42. Number of jobs created was 195. And the total public investment made within those rural zones was $2,125,500. And total private investment made in just that first year was $8,410,259. So I hope to be seeing these kind of numbers for you guys as well over your first year. And you will let me know about these things by completing the annual report that's going to be due in December of next year. So December of 2023, it'll be due by December 31st of 2023. And what I ask you on that annual report is to give me the total assessed tax value of the parcels within the rural zone for the previous year, and then the total assessed value of the parcels within the rural zone for that calendar year. And hopefully you can work with your tax assessor to get that information if you've supplied them with the map of your rural zone. Then we want to know the total number of parcels that were acquired within the rural zone that would be eligible to claim the rural zone investment tax credit for tax year 2023. And then, so you're not confused, let me explain this next one. So then I asked for the total number of parcels acquired within the rural zone that are not able to claim the rural zone tax credit, and that might be yet. It may be that there was a parcel that was acquired, but no business is located within it. So there are not any new jobs. So that would be why they weren't able to take the tax credit yet. Next, I ask you about the total number of buildings that were renovated within tax year 2023 that will be able to take the tax credit in year 2023, and then the total number of buildings that were renovated that aren't able to take the rural zone tax credit yet. Then I ask for the total number of new businesses created within the rural zone eligible to take the tax credit for job creation, basically, in 2023, and then the total number of new businesses created that aren't able to take the tax credit. Then I asked for the estimated value of public investment, meaning investment made by the local government within the rural zone calendar year 2023. And then the estimated value of private investment. So the private investment will be those businesses that have spent money on rehab, and hopefully they would be willing to share those numbers with you so that you can share those numbers with us. And especially if they filled out the amount of their rehab cost on the rural zone certification form, you could just pull those numbers off of that form that you signed. Then I'd like to know the estimated number of jobs created within the rural zone in calendar year 2023, if you can give me that. And then the vacancy rate estimate for the parcels within the rural zone, because what we want to see is that that number has gone down from the vacancy rate that you included in your application. The next questions are, number 2 says, please attach a description of the steps the local government and local rural zone team have taken to facilitate business development within the rural zone over the past year. And I asked for this information because I want to be able to share any successful activities with other rural zone communities. You know, if you've done something really innovative and exciting, I want to be able to share that with other communities. So that's why I asked for a description of the steps that y'all have taken. And then number 3, please attach a description of renovation projects and new businesses that have located within the rural zone over the past year. Include a separate page for each project. And what I'd like to see, if their building was renovated, please provide me some before and after photos. Because I'm often asked to do like success stories for rural zone, and I can pull my success stories from your annual report each year, especially if you give me a good, before and after shot and talk to me about, taking a blighted building from what has been a blighted vacant resource in your downtown to one now that has been renovated and has a business and has, 10 jobs in it. So I'd love to hear about those. If you have some newspaper clippings or press releases about the renovation projects, you can certainly send me copies of those as well. So that's the kind of information that I want in the annual report. Like I said, it's going to be due December 31st of 2023. So I don't want you to be surprised when I send out an email saying that it's going to be due in December. Any questions on the Rural Zone annual report? All right, so you have those. And then I just want to do sort of a overview, recap of, if you kind of a recap of what we said this morning. So questions to ask, if a business approaches you about taking the rural zone tax credit. So the questions that you're going to ask first to yourself is, number 1, is the business going to create at least 2 new full-time equivalent jobs? If no, well, then you already know the business is not eligible. If yes, then we're going to move on to question number 2. Is the business location within your designated rural zone? So you're going to check your official map. If it's not, then the business would not be eligible. And if yes, move on to question number 3. Then you're going to look and make sure that the business that created the jobs has an eligible NAICS code. So you're just going to check your list that you've been provided to make sure that it is an eligible NAICS code. No, then the business would not be eligible. And yes, you can move on to number 4. Now there is that caveat with this one, in that if the business is not eligible, but it's a business that you would really support being in your downtown, you can always submit that request for determination, and we can see if we could approve this business in this one instance for your downtown. So number 4, then you would assist the business with completing the part 1 of the rural zone certification form. And then you will complete part 2 of the form and send via email or mail to Tricia DePadro at DCA, and she's going to complete part 3 for final certification. And then once the business has 2 jobs in place, once they've created the 2 jobs, then they can apply for the tax credit or credits on their state of Georgia income tax return. And they're going to need to complete the Department of Revenue form ITRZ, and then have that completed rural zone certification form, as well as the 2-page letter from Trish to attach to their income tax returns. And that's pretty much it, you guys. Do y'all have any questions? Can you think back over today and let me know if you have any questions about the tax credits?
The question I have is that I think you mentioned it, but from my understanding of other programs, we have a minimum that the full-time jobs have to pay, correct? Is it the state average of 15 something an hour?
Not for this program.
Okay,
No
great.
minimum.
Okay, perfect.
Not for rural zone.
And when you were mentioning things that cities have done to help with this program, I know Amanda Glover had mentioned that they put in a blight tax, and I think in Thomaston they did. Because we, like many communities, have one property owner with 14 buildings and 21 storefronts that are vacant and filled with junk. So, what have communities done that you've seen to help motivate people like that to sell the properties or
We've
fix
heard
them?
that more than once,
The-
haven't
the-
we, Sheree?
The blight tax is definitely something that gets people rethinking, allowing their buildings just to deteriorate. It lights a fire under them to at least get rid of a few. And yeah, that was the case in Bainbridge, and it was also the case with Cornelia. Jesse Owensby has talked about that before. They actually, I don't even think they adopted the blight tax, but they talked about it enough that it got people worried, and they decided, you know what, it's going to be better for me to sell this property than to spend money on, properly maintaining it.
I don't know why they just hold on to him and they don't let him go.
I know.
Yeah.
And then did Thomaston, I heard, did something about, was it that you had to have a business license or an occupied storefront or something? So people didn't just use them for storage? Did you?
Yeah, I do have a recollection of that. Him talking about, and I think Taylor's gone now. I can't remember what it's called.
Okay, I'll ask
An
Taylor.
occupied business registry.
Yeah.
Yeah, it has to be occupied rather than, like you said, used for storage or just to sit vacant. Yeah. Yeah, you've got Taylor's contact information, so you can
Yeah.
contact him. Okay.
Thank you.
All right, so I'm going to send y'all a copy of the slideshow notes so that y'all can refer back, particularly to the frequently asked questions. I'm going to send you a copy of the one-page handout that I was talking about and the press release. I'll also send you the rules on calculator. And when I say I'll send it to all of you, what I mean is I'm going to send it to the rules on team leaders, and then hopefully they can share it with everybody else. So the calculator that Taylor mentioned, where you can put in how many jobs, how much the rehab is, and how much you paid for the building, and it'll calculate what your tax credits will be. I'll send that to you. And you'll notice that if you put one job, everything else will be zero. So you've got to have at least 2 jobs for everything else to calculate. Yeah, so I'll be sending those out to the rules on team leaders. And is there anything else y'all can think of? All right, well then we will be adjourned, and just know that you can always call me and Trish if you have any questions.
Thank you for everything. We
Yes.
appreciate it.
Thank you, everybody.
Thank y'all. Have a good day.
You
Thank
too.
you.
Bye.
Thank
Bye.
you.